1 year ago I had invested in gold, which has now given me 6% returns.
What? My gold investment only gave me 5.5% returns.
Wait a minute, I have earned only 5%.
Seriously? I earned like 6.5%.
असं कसं काय?
Hey folks, Rachana Ranade here, and I welcome you all to the Women's Day special on Is This the Right Time to Invest in Gold? Well, before we move on to timing the investment in gold, let's move on and understand why am I talking about gold. I believe that we all Indians share a very special bond with gold. In fact, gold has been perceived as God's money, then it got perceived as a symbol of power and status, then it started being used as money, and today it is perceived more as a store of value. Investing in gold has seen a dramatic change from only one investment avenue like physical gold investing to various ways in which we invest in gold through the e-ways basically. Now, there are many other reasons why people prefer to invest in gold. What could be these other reasons? They could be something like high liquidity, or it could be something like a hedge against inflation, diversification, and downside protection against equity markets. But the big question is, all these parameters that we discussed, do they really stand true? All these points we are going to discuss in today's video. Let me remind you all one more time that all these creative people are spammers. That's how my account looks like. Also remember, I never give my mobile number in any chat. I neither have an advisory nor do I give any stock tips. Now let's focus on the different ways through which you can invest in gold. Possibility number 1, the traditional method, investing in physical gold. Possibility number 2, investing through SGBs. These are nothing but sovereign gold bonds. Possibility number 3, investing in gold through ETFs. ETFs are exchange traded funds. And the last possibility could be something like investing in gold through futures. Now, all these are definitely very precious, no doubts on that. But there is something which is a little bit more precious than gold. And what is that? Investing in knowledge. In fact, I have just launched Basics of Stock Market 2.0 version on the occasion of this Women's Day. So I would surely request everyone that you can go and check out this course. You can also avail this offer, which is a Women's Day special offer, and enjoy and learn in a fun-filled manner. Now let's try and understand each and every avenue of investing in gold a little bit in detail. The very first one is investing through SGBs. By the way, I have made a separate video on investing through SGBs. You can surely have a look at that so that we don't waste time again and again on the same topics, right? Let's move on with the next one instead, and that is investing in gold via gold ETFs. Okay, so what are ETFs? As I mentioned, these are exchange traded funds. In simple words, it could be as good as investing in gold but in an electronic way. Now, before I tell you more and more details about this, when I heard about gold ETFs for the very first time, I was like, finally, what am I getting? I'm getting some units in my Demat account. But how do I ensure that these units are actually worth some gold or not? Who guarantees that there is some gold against these units? So basically, it's the mutual fund house who is issuing these units. That mutual fund house holds the gold in physical format, and against this physical gold they issue units, and these units are traded over the exchange, and that is why these are called as gold ETF, because they can be traded on the exchange, right? So with this basic information, let's go and understand few more details. These gold ETFs aim to track the domestic physical gold price. So what is the aim of these gold ETFs? They are going to track what? Gold physical gold prices. So ideally, if the physical gold price goes up, ETF price is also going to go up, and in the reverse way also same story. They are represented by 99.5% pure physical gold bars, and these physical gold bars, gold coins, the mutual fund house, that was the same thing that I explained right now, correct? Now, one gold ETF is equal to 1 gram of gold. Okay, simple, no explanation required. But the most important point is that this gold ETF gives us the simplicity of investing in gold, and at the same time, it also gives us a great flexibility. Why? Because with the help of few clicks, you can invest in gold, right? So all these were the basic features of gold ETF. What can be a classic example of it? Gold Bs are the classic examples of gold ETF. Let's move ahead with investing in gold via gold futures. Now have a look at this specific contract, which is the gold February 2023 contract. This is a contract which is traded on the MCX, which is the multi commodity exchange. Now here you can see, okay, symbol gold and whatever, whatever. Here you can see what is the trading unit. Trading unit is 1 kg. If you remember, in the gold ETF, it was 1 gram. Here trading unit is 1 kg. Quotation base value is roughly 10 grams. Now wait, important. Whatever price is quoted, that is X Ahmedabad. Now you might be like, why are all these details given? Now even if you go a little bit downwards here, you can see, okay, delivery centers, designated clearing housing facilities at Ahmedabad. Additionally, delivery centers, Chennai, Hyderabad. What is this? Now please understand, whenever you buy a gold futures contract, okay, what happens? Acha, first of all, when will you buy a gold futures contract? When you're bullish or bearish on gold? Obviously, when you are bullish on gold, you will buy a gold futures contract. Now assume at the end of the expiry period, okay, whatever you had bought at X rupees, at X, and right now at the expiry it is X plus 2%. Okay, in simple words, the gold price has increased by 2%. Will this entire contract be settled in cash? Will be settled in directly your bank account? Answer is no. This will be a delivery based settlement. Okay, means what? At the end of expiry, if you hold this futures contract, physical gold will be delivered to your place. Something like this. Animation team, control. All right. So it was 1 kg, you know. But now that is the reason why you need to understand the delivery location and all that. The price was at X delivery, that Ahmedabad location. If I were to get that gold in Pune, will that also include higher charges? Answer is obviously yes. So I hope you have understood that investing in gold via futures is also possible. But wait, is this also going to be a pretty expensive deal? Expensive in terms of what? In terms of money requirement. Why? If you remember, delivery unit was 1 kg. So do you mean we need to buy minimum 1 kg? Entire amount needs to be given? No. For this concept of margin money comes into play. But then what is margin money and all that? It's a big concept. I've already explained this in the futures and options course. So whenever time permits, you can also go through that course. Well, before we move on to analyzing the various gold returns, I would also like to tell you one thing, because maybe many of you might be still like, why? Because 1 kg of gold. Is there any other option wherein I can buy or sell gold futures with a small unit of just 1 grams? Answer is yes. You can trade in gold petals on MCX, wherein the trading unit is just 1 grams, right? So with that information, I hope you are happy. But I am not happy. Why? Have a look at this. Only these many percentage of women have subscribed to my channel. So all these women who are watching out the channel, please ensure that you are subscribed to my channel. And men watching this video, please encourage the women in your family to subscribe to the channel and also hit the bell icon. With that, let's move on with analyzing the returns in the various gold options that we had discussed. Various gold investing options basically. So let's kickstart with SGB June issue of 2020. Not 2020. Okay, so assume that we had bought the June SGB issue and the price at which we had bought was 4,627. Okay, by the way, I have bought it at 4,627. In fact, if you remember, I had also done a video on that wherein I had explained why I'm investing in SGB. Going ahead, for those who have seen that video, I've also explained in that video that an interest of 2.5% was going to be paid out to the SGB holders on a semi-annual basis on the face value of 4,677. So that interest or the coupon amount comes to 175.39. So please understand, how much had I invested? 4,627, the purchase price. How much interest did I get? 175.39. So can I say my effective cost price right now is 4,451.61. Simple. What is the current market price as I shoot the video? 28th February 2022. The current market price is 4,720. How much returns does this translate to? This translates to a return of 6.03%. Okay. Let's move ahead with analyzing the returns given by gold ETFs or gold Bs. For that, have a look at this chart from TradingView, which is about gold Bs. And if you check Nippon India MF, What is that? That is the gold ETF that we had discussed, right? So what am I comparing? See, the time period has to be the same. Which time period? Price at the time period with during which I bought this versus as on date, which is the common time frame, June 2020 and Feb 2022. So here you can see the average price in June 2020 was 41.79. You'll be like, how is gold available at 41.79? Remember, the size was just 1 gram. Ticket size was 1 gram. Then if we check for February 22, here you can see average price is 44.15. Now, what are, if I just check this scenario and if I try to calculate selling price, if let's say I'm talking about 44.15, buying price 41.79, what are the percentage returns? They are 5.64 percentage returns. Simple deal here. Let's move on with gold futures in that case. Now, if you have a look at this chart from TradingView, again you can see it's the same contract that I showed from NCX, Multi Commodity Exchange, right? What is the time frame again? Same, June 2020, and current time frame Feb 22. What is the cost price? June 20. Again, I've jotted down high, low points, and average is 47,123. What about the gold futures in Feb 22? The price is 50,176. Now, if I compare these two dates, what is the absolute return here? It is 6.47%, right? Now, moving ahead with physical gold now. Now, there was a problem because, physical gold rates will differ from city to city. And, I am not a goldsmith, right? So, I will not have all the daily rates of gold written in my house or something like that. So, what I've done, I've referred to a website. The link of the website I've given in the description box. From that website, gold spot prices, June 2020, you can see the high price, low price, average is 4,490. Feb 2022, again you can see high, low prices, and average is 4,607. What are the returns given by physical gold? In this case, it is 5.19%. Whoa, wait. Now let's do a summary. Have a look at this summary. SGB, ETF, gold futures, and gold spot. Gold spot, not that word. Gold spot price, that is physical. Okay, so SGB you can see 6.03% returns, ETF 5.64% returns, futures 6.47%, and spot 5.19%. I hope you have understood that the returns are more or less similar, but they are not the same. So in the pre-bumper, if you remember, all four ladies had invested in gold, but everyone was getting the different returns. And now I'm sure you might not be like, asa kasa kai. Now you know the reason for that, and these are the returns. So you can decide for yourself which could be the investment route that you choose for investing in gold. Now that you have understood the perspective of returns for all these four investment avenues in gold, now the big question is, out of these four, is this the right time to buy, invest in any of these, or what? I mean, still few questions unanswered, right? If you remember in the beginning of the video, in fact, I had said that there are 4 reasons why people in fact invest in gold. We'll go through them one by one. The very first one was, it gives a very nice diversification. So if you have not invested even like 1% in gold, I think yes, this is the right time to invest in gold. Many people ask me how much percentage. So ideally, experts say that 10% of your total portfolio could be invested in gold. Now, if you ask me which out of these 4, if you are thinking only from a perspective of diversification, then I think gold futures is out. Why? Because gold futures has an expiry. So if you're taking just a 1 month expiry, if you're taking a 2 months expiry contract, 3 months expiry contract, it will not be a long-term diversification plan for you, right? Otherwise, every single month you will keep on, buying futures, again selling and again buying. Makes no sense, right? So if you're only thinking from investing in gold from a diversification perspective, it could be physical gold, it could be gold bonds, because gold bonds, SGBs, they have a maturity of almost 8 years, right? And third, gold ETFs also possible. Let's move on with the next one, which is hedge against inflation. Now, again, just look at all these 4 returns which we had discussed in the previous section. Is this clearly beating inflation? And my answer is clearly no. Why? Inflation in India is also around a similar level. Now you might be like, but generally gold returns beat inflation, right? Answer is correct. But in the long term, in the short term, it could be wavy. Sometimes gold returns could be less. Sometimes they could be high. And in this case, it's typically going neck to neck. So if you're looking at gold investing just from a perspective of a hedge against inflation, it may or may not work in the short term. But whatever we have analyzed since last so many years, it will surely act as a hedge against inflation in the long term, right? Then again, out of these four, which could be acting as a hedge against inflation? It could be either of the four. No specific choice as such here, right? Moving ahead with the third one, high liquidity. We generally enter into gold as an investment because it is assumed that yes, liquidity is generally very high in gold. Now let's have a look at SGBs. Now if you remember, I had told you that I had invested in SGB June series. Have a look at daily average volume, 451 units. Wow. If you look at July series, 1065 units. August series, 1826 units. If you look at May series, again going back now, May series was having 1031 units. This is, by the way, May 29 expiry. And even if you look at May 28 expiry, it's just 621 units. Now if you have understood that here the average daily volume is not that great, so it may be possible that you are wanting to sell it, but you might not get the same rate that you are expecting for that. So if you're looking at investing in gold from only a liquidity perspective, I believe that gold bonds might not be a suitable option. And in fact, in my gold bonds video, I've also mentioned that 8 years is the time frame. After 5 years, there is an exit. So this is more of a long-term perspective investment option, not good from a short-term perspective. Now, if you see gold Bs for February 2022, look at the trading volume. It's into 100 plus millions. So can I say, if I'm talking about gold ETFs, the volume is really amazing, right? So can this be taken into consideration from a liquidity perspective? Answer is yes, right? What about physical gold? Wow, I think this is the most suitable option if I'm talking about liquidity as a perspective. Not only in India, anywhere across the world, you will get absolutely amazing liquidity, right? What about gold futures? In fact, if you remember, I told you that if you hold the future till expiry, you'll have to take the physical delivery first and then sell it off. So if you're looking from a liquidity perspective, again, gold futures also, I think you should avoid. Okay, so I hope 4 scenarios, 4 different investment options based on liquidity. I hope you have understood. Now moving on to the last one. What was the last one? Downside protection against falling equity markets. Now here comes an important point. Generally it is said that gold and equity go in a inverse relation, right? Is it a right time to invest in gold right now? Everyone knows about the Russia-Ukraine war which is ongoing, and people, no one has 100% clarity on what might happen in the coming few days. Whenever there is uncertainty, do equity markets like uncertainty? No. And equity markets go down. If equity markets go down, then gold generally goes up. Okay. So can you invest in gold from protecting your portfolio from a downside? Answer is yes. But again, wait. If you're talking about physical gold, fair enough. Futures, gold futures, fair enough. ETFs, again, fair enough. Now, problem is with SGBs. Now, what is the problem? Because it's a gold bond, it gets impacted also because of the yields. So, it's not a very pure play, especially in the short term. In the long term, again, finally, SGB prices will somewhere converge with the underlying gold price, right? But again, in the short term, if you're looking at investing in gold only with the purpose of protection of downside risk against equity, I believe that investing in SGB can be avoided. Any out of the balance 3 options could be chosen. Wow, I hope you have enjoyed this detailed analysis of investing in gold and understanding the various scenarios which can be considered while investing in gold. If you want to learn more about SGBs, just have a look at this video, and if you want to know more about Nifty Bs, just check out this video. Till then, take care, Jai Hind and bye-bye.